Hi, all, and I'd like to welcome you to another session of our vidcast podcast series, where we delve into the 7 forces that you need to align for your business success. With me today is Russell Boedecker. He's worked in the capacity of Chief Operating Officer for several companies and Chief Financial Officer. He's recently received an accreditation in strategy and competitive analysis. So, welcome, Russell. It's good to have you here.
It's a pleasure to be here.
Why don't you give another 1-minute kind of summary of your career? That mine was really short.
Oh, sure. Well, so far I have worked for companies ranging in size from pre-revenue startups, small companies, mid-cap companies, and the largest companies on the planet. That's about as broad as you can possibly get. And because of that, I have seen companies at each stage of their growth, and at each stage they have some very specific problems and things you need to build and have in place in order to scale your company to get to the next level.
Okay. In order for us to get started, let's start with some very basics of finance. And I too deal with companies. I come out of the corporate world, which was multinational, multi-billion dollar companies, and then I work with, I'll say it, wannabes. They're not even a company yet. They're thinking of forming a company. So I often talk with the clients about the 3 critical, basic financial documents of the cash flow. And I always put that first, the profit and loss second, and the balance sheet third. Can you comment on those 3 documents and my choice of order?
Sure. Well, frankly, the cash flow statement really is a good place to start, and like frankly, most people do not start there. They jump right to the P&L, which, quite frankly, tells you quite a bit. But the cash flow statement is quite critical because that tells you what is happening for the actual cash for the business. The typical cash flow statement has like 3 sections. One is cash flow from operations. One is cash flow for investments, which could be buying property, new equipment, things like that, and then finally financing. And frankly, all 3 do have value for them, but the one that I really focus on first of all is the cash flow from operations, because that number tells you for your basic business operations, the day-to-day business, is this business generating cash or is it burning cash? And that's a real critical number to know. And yes, it is good to see the absolute number, but there's also value for looking at trends over time. Is that cash flow from operations, the basic operations for your business, is that cash flow going up, becoming more positive, or is it starting to decline? And that can give you early warning signs that there's something happening for your business, that cash is no longer coming in. The problem you have with just looking at the P&L is because of the different accounting rules, what you see on the P&L can, for a period of time, look quite different from the actual cash flow for operations. So only looking at the P&L can give you a misleading view for the company. Things could look very positive on the P&L side, but it maybe the company is like burning cash, or cash flow from operations is starting to decline. So I would always start looking at that piece, and specifically the cash flow from operations.
One of the things that I often see is you can have a company with profits exceed the expenses, so you've got a profit for that month.
And that's good.
But at the same time, you can still have the cash in your banking account go down that same month, even though you made money.
That's correct. And that's because of the deltas between the way you have to book things for accounting versus the actual cash coming in, and especially in a short period of time, those 2 can be quite different.
So I use QuickBooks, and for the cash flow statement, the only option I have is cash basis. However, for the profit and loss statement and the balance sheet, I have options of accrual or cash.
Right.
What should I be looking at? When should I choose one or over the other?
For the P&L and balance sheet, you should always use the accrual because that keep things quite consistent. That's the accounting rules. And as far as what's happening cash-wise, of course, you go back to your cash flow statement, which does all the corrections to make sure that all the accounting mumbo-jumbo gets translated down to something closer to your actual cash.
Okay, let me give you an example that lots of people would run across, and I'm doing it with a nonprofit right now. We issued the annual dues, and I tried to do it before the end of the year to give them the opportunity to pay in advance to improve our cash flow operations. If I book the invoices into profit and loss, I have this huge number on a accrual basis, but I really haven't done anything different. I've just issued a bunch of pieces of paper for annual dues. My accounts receivable on the balance sheet is also going to go through the roof, right? My cash in the bank is going to have done absolutely nothing, right?
Right.
And that's what I should do, right?
Correct, because the cash flow statement for that case, I will factor that in and basically show zero cash flow for those transactions.
Okay, so now I've issued all of those invoices and somebody doesn't pay. What's the proper way to back that out?
That would be, well, that would be bad debt. You would have to write off the AR for that case.
Okay. I can't just remove it, right?
Unfortunately, in QuickBooks you actually can, because QuickBooks doesn't have controls, but that is not the right process.
Okay.
You should go into a, can't think the term by credit memo.
Well, we get a lot of journal entries, and
Yeah.
I took over this nonprofit in July, and the books weren't very clean at all, and so I've got a few journal entries that I'm not sure I've got right yet.
Right. The key thing is to never, absolutely never, just go into QuickBooks and just delete the entry, because it's there for a reason. If you have to correct it, you put in a correcting journal, so there is a full history for all the transactions. And unfortunately, QuickBooks, because it is a very basic tool with some very limited controls, it does, of course, let you delete things, but I would not recommend it.
Okay.
That is a bad accounting practice.
Okay. So dealing with companies, whether you're a startup or even thinking of starting up and trying to raise funds, or you're a multinational, multi-billion-dollar company, you have to come up with a projection for 1 to 3 years.
Yes.
Let's see, so I've done revenue and expense projections. I've been asked over my time to do a monthly profit and loss so that I could see what the cash flow was, but not always. I've never done a projection of the balance sheet in any of the work that I've done. And now you have this accreditation of a strategy and competitive analysis. So how does that factor in? Have you found some secret to helping do a 1 to 3 year projection?
Right. Well, for that question, there is really two parts. First of all, would be the actual strategy development. And then, of course, based upon that, there is a mechanic for actually building that 3-year plan. And so maybe we should talk a bit about the actual strategy formation, because that feeds into building that particular plan.
So I often find more and more that it is a CFO who is taking more of a responsibility for developing strategy. Do you see that?
That is certainly true. Well, I would say the CFO role has moved towards managing the strategy process. For most companies, of course, the strategy belongs to the CEO, but of course, the CEO needs help to take his particular vision and thoughts and then craft it down to an actual strategy. And that portion has now tended to fall more towards the CFO role.
Okay. CFO, CPA, controller, treasurer, bookkeeper.
Yes.
What the is the difference?
Well, they are quite different, and in some cases, they can be. The same person could possibly wear several of those hats because frankly, in past companies, that's what I've done. Bookkeepers are quite valuable, but they have a very limited function. They are more tactical kind of work. They're paying the bills, booking in the invoices, booking in transactions, very mechanical. Just getting the books correct, and that's pretty much it. They really do not have the capability for like figuring out like what does this mean for the business? Is the business going in the right direction, the wrong direction? Metrics, projections, forecast. That's not their purview. They are just the blocking and tackling, which of course has to be done because somebody has to process all that paperwork. Your typical controller will tend to be kind of more on your pure kind of accounting side, of course somewhat higher level than your bookkeeper, but of course making sure you have the proper policies being followed, things are all GAAP compliant, producing financial reports, but most of that tends to be backward looking because that of course that is like really where the accounting profession lives, is doing things and making sure the past is correct. Some controllers do have some skill to do some kind of limited forward-looking things, but that's typically not their primary skill set. The CFO, that's the person that, of course, looks at things for the past because that's a good base, but they are typically much more forward-looking, typically maybe 20% of what's happened in the past, taking care of compliance, and then 80% of, okay, where does the company need to go? What kind of problems do we have? What do we have to measure to make sure the company is on track, to make sure we can do our strategy? And then what kind of plans, as well as potential investments, does the company have to make in order to make sure we can be successful for the strategy?
So what's the treasurer? I honestly don't understand what a treasurer is.
A good question. Now, the treasurer role as a separate function would typically only be seen for fairly large companies where they have all kind of investments. Maybe there's bonds, if it's CDs, things like that. For smaller companies, the treasurer function would typically fall beneath the CFO. And that's really managing the banking relationships, the funding needs, the cash flow, checking cash balances, cash burns.
Okay, so I may be a little confused. So I deal with a few companies that are formed in the state of Oregon, and in the formation of the company, there has to be an officer named the treasurer.
That is correct, and in past companies, that of course has been me. So I've had like several roles, the CFO plus the treasurer, a combined role to one person.
Okay, so one more thing then on this topic. It used to be that a company would have a CPA. And what I'm hearing from a lot of people is the A in that CPA, accounting, looking backwards, has become much more their focus now than it was, say, 20 or 30 years ago.
Correct, because of course, compliance now has grown fairly exponentially. SOX compliance, we have various different kind of regulations, just making things GAAP compliant with all the changes coming from the FASB, and there's more coming, it seems, each year. There is so much work that has to take place just to make sure the company's books stay in GAAP compliance. That's taking more and more of their time, and there really isn't that much left to be looking forward. And of course, like frankly, somebody that has gone to get their CPA, they're really focused on all the accounting rules, the regulations, the processes, and so most of their thinking will be closing the books, making sure it's correct, and that's mostly backward looking, but that takes now much more time than it did 20 years ago.
That explanation really makes a lot of sense to me and helps me understand. And so having a bookkeeper, as you grow and scale and have a different company, starting with a bookkeeper and having an outside CPA in order to do your annual filings and things like that.
Correct.
Then the next step would be to have a controller, and the next step would be a part-time CFO who comes in to help with growth strategies and projecting out to the future. And then finally, you get big enough to have a full-time CFO.
That is one model, but there is one more that I have done, which is to come in full-time and play both roles as the corporate controller plus the CFO and just wearing two hats. And that has worked for companies ranging from maybe 10 million up to 25 million. And then finally it gets so big that I get so swamped and I say, okay, now it's time to bring in a full-time controller because that's taking too much time, and now the company needs like a much more focused CFO time. So either one works, but it could be one person doing both the CFO plus a controller role. There's not too many people that have skills to do both, but if you can find that person, it's a 2-for-1 deal.
Okay. Now, one more question then. Should I just have an outside virtual bookkeeper?
That is what many companies do, and that works for companies ranging up to, maybe $10 million size range possibly, because frankly there is not like that much work to do full time because you're processing bills, invoices, and I have seen that particular model work again up to maybe $5 or $10 million. Once you get beyond that, there's so much transaction volume you probably need at that point. I'm not just a bookkeeper, but a more professional accountant.
Okay, great. We've been a little bit in the tactical numbers, how do I transactional basis kind of thing. So let's move back to that strategy level a little bit. We use numbers to keep score on our business, and I say that because I partially do pro bono work for an organization called SCORE, and I had to come up with an acronym there. I thought maybe SCORE could stand for Strategic Characteristics that are observed regularly by everyone. Kind of, another way of saying balanced scorecard, if you will, kind of thing. But
yeah, sure, metrics, yeah, etc.
So in every business seems to be in the game, which I say grow and make earnings. So strategy comes first. And tell us a little bit more about this accreditation in strategy and competitive analysis and how that can help companies.
Sure. Well, for most companies, doing strategy is something that they really do not spend time on for two reasons. One is everyone's so busy. There are so many things to work on, and strategy takes some time. A second reason is if you really want to do strategy right, it involves an awful lot of thought and soul searching. And I have had more than one CEO in going through a whole strategy process say, wow, this is really hard work because you really have to think. And so it tends to not get to focus because of the tyranny of the urgent. There's so much going on right now. And of course, most people think we're going in the right direction, but unfortunately, they really haven't sat down to go figure out exactly what is my strategy. The problem tends to be that even if the CEO really understands the strategy and it's all in his mind, what I've found is that is usually the only place that resides. Going down one level, two levels, certainly down to the line employee, most of them really have no idea what the strategy is. And so because of that, they may not be moving the company towards the right direction because they think it's supposed to be going this way, but in reality, it is supposed to be going somewhere else. So it does make a perfect sense that, and it is a great return to spend some time building a formal strategy and then a communication plan to instill that down to each person as to what they need to do in order to make that strategy successful.
So what did you have to do for getting an accreditation in strategy?
Well, of course, there was the obligatory test you have to take, which meant studying various aspects from soup to nuts. It was about, I had spent about 12 weeks studying the whole process from the basic concepts down to measurements, implementation, the execution, and then, of course, taking the test, which was partially written, and then partially doing a case study analysis of some company, and they had a problem. Okay, what should their strategy be and why?
Okay.
Passed on the first try, by the way.
Great. So you just said something, though, in there that is important. The reason for going through strategy is partially to figure out where you want to go, but also part of it is to get everybody to get into the boat and row with you. That
is really critical. There is one company that I had worked for, and I was sitting with the C-suite members, and each one of them, because I had spoken to them separately, and they all told me, I understand exactly what the strategy is. I know exactly where this company goes. I've got it down. I'm in full alignment. And then we all met together, and at that point, I was actually playing the role to actually kind of run the strategy process. And so I started off like talking with the CEO. He started first on his thoughts, and then each person began talking, and it became very clear to me that not a single person thought that the company strategy was the same thing. They all had a different view of what the company strategy was, and these are the C-suite members, and they had completely different views. Just imagine down to the line level people. I'm sure they had absolutely no idea what the strategy was, or completely different from theirs. And so part of that process was to let's get everybody on the same page and have one definition for what the strategy is.
Or worse, all those people on the line said management doesn't know what the hell they're doing, and so what am I supposed to do? They become, what we hear about is they're all the 70% of employees who are disengaged from their job because they don't have something that they understand that they're working toward.
That does tend to happen, but what I've seen in most cases, which is probably more damaging, is the people doing the actual work, they believe they know what the strategy is or like what is important, and they'll start moving in that direction, but that may be the exact opposite of what the company's really trying to do, and so you have people kind of diffusing their work, and they're moving the company in all kind of directions, which means strategy execution is probably not going to work, but people are really trying to do, as part of their day job, what they believe the company wants them to do to be successful, but in many cases, they have the completely wrong idea because it's not been communicated.
So, getting that strategy down to everybody so that they accept it and implement it requires some sort of documentation and communication to the employees. You probably need to tell the suppliers. You want to tell your customers what your strategy is. You have these things called investors typically, as well as the employees. So what methods do you like for documenting and for communicating strategy?
Well, first of all, what is typically missing is like really the definition of what the strategy is. You have to have that first before you communicate it. And as part of the strategy process, You really need to start with, of course, the term mission statement. That's kind of a bad term because most companies' mission statements are completely meaningless. It's something like, we're going to have happy employees, we're going to save the whales, save the world, all those kind of things, but that is not a mission statement. You really want to start with, and you can call it your mission statement, but it's really, why does this company exist? Why is it here? What is the purpose of this company? That's different from, save the world kind of things. A very clear, concise message of why does this company exist, and like what would happen if this company disappeared. There is some value for this company, and that's what you have to first define is, why is this company here? That is a clear mission statement, and it should be very clear, 1 or 2 sentences, not a long-winded thing of like, why is the company here? Believe it or not, that is difficult to go define because, of course, you have to really understand, why are we here? That's the first starting point, which is a great communication tool, because once you have that and you post it out and then talk about it, that is a very clear message of why we come to work each day. Once you have that, the next piece down is to build the vision statement, which most people kind of get confused because vision statement, mission statement, sometimes they sound the same, but they're 2 different things. The mission statement, that's why are we here? And the vision statement is saying, what does this company want to look like in, let's say, 5 years?
Now, I like the way you just described it because I agree. I tend to look at the mission statement as an outward-looking thing as to what we're trying to do for the world or why we exist or something like that, whereas the vision statement is exactly that. Okay, I'm at point A today. I want to be at point B as a company at some point in the future. What is that point B that I want to get to?
Right. And the vision statement, that can really inspire people to say, that's where we're trying to get to in 5 years. Okay, now I know a little more what I should be doing in my day-to-day job because now there is an objective. Yeah, the mission statement is something that you're probably never going to reach because that is like your purpose. There's no real end to that, let's say. But the vision statement is something a bit more time-bound, and it's rather specific. This is what this company wants to look like in 5 years. Now, from your vision statement, that's where you start to build your strategy to say, if this is where I plan to be in 5 years, I'm currently here, I have to do some things in order to get there. I make certain investments, build certain products, bring in certain people, new products, new markets. Something has to happen, probably different from what you're currently doing, in order to get to that vision statement. And that's what can start to formulate the strategy from this kind of direction to some concrete actions that have to take place.
So right now, very recently, I contributed to Wikipedia. And it's end of year. Everybody is asking for money for the end of the year.
Including Wikipedia.
Including Wikipedia, every time you log on to an article right now. So the mission of Wikipedia, I would say, this isn't necessarily exactly what they say it is, but I would say it is to capture and disseminate all of the knowledge in the world. Now, the vision statement would be that we're going to do it electronically, make it available in these countries, have X number of people accessing the Wikipedia on a regular basis. I actually refused to donate to them until they told me some things. I used to have an Encyclopedia Britannica and an Encyclopedia Americana.
All the big books, right?
And they all have proven articles written by professors and others who unfortunately may be politically biased. Even history people are biased in some fashion. But I wanted to know, where is the content authority for Wikipedia? They gave me a very good statement back as to how they're doing it, what their strategy is, if you will, for the future to improve the quality of the articles that are out there that I'm accessing so that I can rely on them.
Yeah.
So that's great. So we're coming to time to wrap up here. So I would hope and expect that some people are going to want to contact Russell Boedecker either to ask some follow-up questions from this or to engage with you somehow. So how do they
Happy to.
contact Russell Boedecker?
Well, two ways. My website is www.russellboedecker.com. That's RUSSELLBOEDEKER, all one word, .com. Or you can, of course, call me at 503-858-8927.
All right. Well, thank you very much, Russell.
It's been a pleasure,
Appreciated
Paul.
the opportunity here to talk with you.
I just love strategy if you haven't figured that out.
I hope you all find these Vidcast podcasts of interest. I'm Paul Menig with Business Accelerants. Thanks very much, everyone.
Take care. And thanks, Paul.